All right, let's head to the commodities market update now. Join us for this is Mr. Bismarck Rewane, he's the CEO, Financial Derivatives Company. Great to have you on the show. Good morning.
Good morning.
So we have another exit announcement from the Nigerian market. This time is the Ogun State-based steelmaker RT. And we've had about 6 so far in the first half of 2024. Tell me, is there any silver lining at all to these exits, or how can Nigerians make lemonade with these exits?
Yeah, I mean, let's face it. What is more important in economics is what the future holds rather than what the past has shown. So typically, what we are saying is that we are beginning to see some investors who have a higher risk appetite coming into Nigeria, while those who are skeptical or indifferent or have other options and now begin to review what they have to do next. Some are exiting, some are downgrading their presence, while some are actually coming in. Those that have tolerance and have the capacity to manage in difficult situations, what we call how to thrive in chaos, those ones are coming in. But after chaos and after difficulty comes the light at the end of the tunnel. I think that cautiously we are optimistic that things are going to start improving slowly. And that's why I come up with the whole idea that the inflation numbers came out on Saturday and pointed to a particular type of picture. The picture is that the rate of increase in price levels has actually begun to slow down. And therefore, we are projecting, tongue-in-cheek, that inflation begins to decline from the month of July. The EIU was more aggressive and says that inflation will begin to decline or begin to flatline from the month of June. We think that, give or take how the minimum wage is handled, we think that we begin to see a moderation in rate of inflation in the month of July into August. Not drastically, what we call disinflation will begin to kick in at that time. So there's some light, a little flicker of light at the end of a long, dark tunnel. Don't forget, it has been 17 consecutive months of price inflation. What is going to make this happen is that the central bank, of course, has begun to get a hold of money supply growth. If that happens, even though last month it increased, if that happens aggressively, right? If that happens and we begin to see the management of our oil revenues much more efficiently, then we will begin to see some improvements. But generally speaking, the dark days are probably coming to an end, and a few bright lights begin to come up as we go towards the end of 2024 into 2025.
All right, definitely we have some multinationals that still want to operate, in the Nigerian market. What tip would you give that kind of company, at this time to navigate, this Nigerian market? And, for some multinationals that are looking into this market and seeing some kind of opportunity, what tip will you give them and say, this is how you navigate the Nigerian market at this time?
The saying is that it's during war that generals are made, and it is during bad weather that the good pilots. So economies are by nature cyclical. There are times when they decline and slow down and go into a recession, and then the times of recovery. But the recovery that is coming is going to be coinciding one major development, which is the engagement of Nigeria in the African Continental Free Trade Agreement. Nigeria is the largest market in Africa. And therefore, when it comes to scale, economies of scale, Nigeria and South Africa and Egypt are likely to benefit more than any other countries in Africa. So if you take that and say that if I produce in Nigeria, and Africa is a market, not just Nigeria, Africa is a market, and I can bring down my cost of production, my EBITDA will begin to increase, then I can take advantage of the economies of scale, the increased infrastructure, which allows for roads and aviation and marine infrastructure, which allows you to ship your goods across Africa. You will see that big advantage. And intra-African trade has gone from as low as 12%. It's now at about 18%, going towards 30%. And don't forget, this is almost a $2 trillion economy, right? And so if you can imagine every percentage point gain you make on the African economy means a significant increase in your total market share, global market share. So it is not by coincidence that the likes of Dangote, Refinery, Dangote Cement, and many others are now beginning to take advantage and keeping their sight squarely on the African market rather than the Nigerian market. So it's a regional play rather than a domestic play.
Right, I guess there's still opportunity right here in the midst of the chaos. But you did mention a 17th consecutive monthly inflation increase and the possibility that we might see a decrease for July. But we've seen the UK. The UK, they've reached their inflation target of 2%. In the US, they're also nearing their inflation target at this time. But we see the central bankers are still not ready to cut rates. Just yet. They're telling the markets to hold on when it comes to rate cuts. But how would this, what we're seeing happening in the UK, how would that, impact the Nigerian economy, at this time, even though we saw our exports to the UK actually dropped?
No, the beauty is that the UK is probably our second destination of all our diaspora. That is Nigerians who are working outside of Nigeria after the US. And I think the UK before you have other markets. So if the UK inflation is coming down and therefore UK interest rates are going to come down, it means that the Nigerians who are living in the UK will have lower mortgage rates. It means that the economy is going to start growing again. They will have jobs. And if that happens, then the remittances to Nigeria will increase. And if the remittances from diaspora to Nigeria increases, then the Naira gets stronger and there'll be more. There'll be more of our Nigerian citizens who are participating in our bonds, financial instruments, which are going to be floated by the federal government. You will hear that soon in the, in the supplementary budget. The Minister of Finance has alluded to the fact that we need to issue financial instruments targeted at Nigerians who are working abroad. Therefore, the fact that the rate of inflation in the UK has gone down to 2%, which is a target of the Bank of England, I think that July 4 is an election which is only about 2 weeks or 3 weeks from now. Then more likely than not, we would have a Labour government which is more friendly towards immigrants and foreigners who are working there. So when you put all of these things together, I think that there's a sign of this. It even makes it more imperative and imminent that a global recovery will have an effect on the Nigerian economy. And the Nigerian economy, provided that we manage it efficiently and transparently, will benefit significantly from these global trends.
And we know the global central bankers from the US and the UK, we know they did lead with the rate hikes. When inflation was stubbornly high, getting to about to double digits in the UK and also in the US. But we've seen their inflation rate get back to the target levels at this time. We've also been raising rates in Nigeria. What can we learn from these economies at this time?
Yes, Ladi, that's a very, very important question, right? The truth is that there's a lag between when you make policies and when they have the impact. And the impact is not instant. It's not a light switch. The impact is over time. So what are we seeing? The trend is that since we aggressively increase interest rates, we have begun to see is a reduction in the rate of increase in prices. And inflation expectations are now clear that inflation is likely to start declining. So there'll be some disinflation. Like what has happened in Ghana, happened in Angola, we've seen that situation. There's nothing unique about the Nigerian situation. It only means that it's taking longer because we didn't do the sequencing of our reforms was was not well articulated. But now that we are putting all three parts of it together, that is, we are dealing with reverse taxes, which are subsidies, we are dealing with money supply growth, we are seeing diesel coming down thanks to the Dangote refinery, and we are likely to be seeing some other factors that lead to logistics. Then we should slowly begin to see some benefit. But what is important is that government spending on expenses, the waste in government has to be curtailed by fiscal means and using digital technology. But important is that the central bank has to now begin to mop up liquidity the way they have been mopping up, rather than just increasing interest rates for the sake of the interest rate. Therefore, interest rates work as a tool, as a therapy for high inflation, but it is not a single dose. It is a combination, a cocktail of policies, including interest rates, strengthening the currency, fiscal stability and transparency. All of this put together will give you the result. But the result is not going to happen overnight. It's not a magic wand. It's going to take time. So that's why we say, as we approach the end of this year, and starting from July, we begin to see some moderation in inflation. We begin to see interest rates begin to come down. We begin to see some growth, and we begin to see some people coming to invest in Nigeria again. So the picture, while it looks bleak today, if you take a snapshot today, but with the crystal ball we see, we are seeing some slight improvement as we go along, provided and this is that we manage our waste and also deal with corruption within the system.
And with your projection for a possible decline in inflation for July, that means the second half of 2024 might take it a little easy on the pockets of Nigerians.
Definitely. Nigerians are going to be better off at the end of the year than they were at the beginning of this year. Definitely.
After all the heavy lifting. Thank you so much. Always great having your perspective, Mr. Bismarck Rewane, CEO of Financial Derivatives Company. Thank you so much.
Thank you for having me. Thank you.